Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Pat Reily, co-founder of Uplinq Financial Technologies, to discuss the latest GDP data and economic conditions for small businesses. Pat, it is great to see you as always. Welcome back to Trade Talks.
Hey, it's really great to be back.
All right, you got it. Let's start with the GDP data, right? What was your take on yesterday's robust numbers, which indicated a nearly 5% growth rate in Q3? And what does this mean for the remainder of 2024?
Undoubtedly, these are really strong numbers. And the Fed's really been anticipating this for a while. But they're strong numbers relative to what we've experienced, but also at a global level. And I think that's important to understand. Equally important, though, is to understand that it's mostly driven off of strong consumer purchases rather than business growth. And consumers did it by basically draining their bank accounts. That's really important to think about. With savings now near record lows, it's not like consumers are prepped well to go on another big shopping spree. So I wouldn't expect these kinds of numbers to continue. I'm not saying that they're warning lights, but just that 2024 GDP is probably going to be a little more modest.
Mm-hmm. And doesn't GDP growth, of course, one of the primary measures of economic health, doesn't that seem to contradict the talks of this recession that has yet to materialize and the Federal Reserve decisions to raise interest rates earlier this year?
Well, for sure, on their own, they're really great. I mean, I think something really to keep a close eye on is new home construction and new home purchases. With interest rates really high and they're not coming down soon, the cost of owning a home, the burden of getting into a home has never really been higher. The Fed actually creates something they call the affordability index. It's at a record low, which means it's more difficult to pull off than ever. And so if consumers are out of savings and they can't afford a home, that means that the growth of the economy is really going to need to be driven off of real business growth if we're going to continue to experience this kind of economic health.
Let's turn to another topic that's been driving the news cycle. Yesterday, for the first time since 1995, bank regulators updated the Community Reinvestment Act, a law meant to obligate banks to increase lending into underserved and distressed communities. How much tougher will the revised CRA really be on our financial institutions? And from your standpoint, does the revised CRA really go far enough to support marginalized communities and faced historic inequities when it comes to mortgage and small business lending?
For sure. I mean, this is an interesting thing. I mean, since 1995, we had this little thing happen called the internet. We might be using it right now, as far as I know, but it's kind of humorous that it's taken this long to really step back. And CRA was originally intended to say, based on where your branches are, Mr. Banker, you need to be investing in those communities by making loans available. And so now they've really stepped back and said, boy, the world's changed. What we need to be doing is challenging you to invest everywhere you reach, which means now that I'm on the internet, I can really be just about any place. Now, make no doubt about it, it's a big burden. The law is over 1,500 pages long, so it's no small task. But at the same time, I think it's targeted at creating the right kinds of behaviors. How do we step in and think about taking the expertise that banks have and directing that expertise toward encouraging economic growth in places that may be a little more distressed, a little more challenged, places that we can create jobs in, we can create better employment in, we can create opportunities for everybody. When we do that, we're really promoting overall economic growth. Everybody wins in that process.
So overall, Pat, how would you assess today's economic conditions for small businesses nationwide, particularly access to working capital through credit lending? And is the state of the U.S. economy strong enough, in your opinion?
Yeah, it is. There are plenty of signs out there that it's challenging for small businesses. Bankruptcies right now for small businesses are as high as they've ever been since 2010. To be fair, though, at least some of that is based on all those new in-home business startups that happened when COVID came about. A lot of people said, hey, maybe I'll start my own thing. At the same time, borrowing money has also gotten very tough. Banks on average, Cleveland Fed Reserve takes a look and says, how much loans, what kind of lending is actually going out there? They ask banks have said, hey, for the last 5 quarters, we've been contracting on small business lending. So I think it's important to note that it is a real challenge. And as always, small business health is a major driver of our economy. So it's very important to work this out, get it figured out, and get to a point where we can drive forward.
And finally, Pat, what sort of trends do you anticipate to see the rest of the year in terms of small and medium business lending?
Yeah, we see many top banks investing heavily right now in tools that will help them reach small businesses better. So while I don't think it may be by the end of this year, I think by first quarter, we're going to be seeing some of that technology start to come online. And that's pretty exciting. It's the potential that many banks will start to look a little more like fintechs in terms of their capability to reach creatively to connect with customers. So overall, I'm robust about 2024. I think there's a lot of good stuff in the pipe, but it's going to be based on driving businesses forward, not on consumer spending.
All right, Pat, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Market
You're
Reporter
awesome.
at Nasdaq.
Thanks a bunch. Bye-bye.
You got it.